everyone. Welcome to the 13th of October weekly market updates on Technical Insights. This morning, Asian markets traded sharply lower after US President Donald Trump threatened to add another 100% tariff on imports from China. The Japan Nikkei 225 index fell by 1%, while China's CSI 300 index was down by more than 1.7%. Hong Kong Hang Seng index fell the most by close to more than 3%. This latest tightening of trade restriction and renewed tension came after Beijing imposed that foreign entities would need to get a license for any export that contained rare earth worth 0.1% or more of the value of the goods. Trump accused China of holding the world captive by using its rare earth metal resources, and expectation for a China trade deal got swept off the table as both countries are expected to meet in South Korea at the end of this month. China on Sunday said that they are not afraid of a trade war with Donald Trump and accused the US of a textbook double standard with Trump's promise of the additional 100% tariffs. In a Truth Social post on Sunday, Trump suggested to investors that he may not follow through on his threat to pose a massive tariff on China, saying that don't worry about China, it will all be fine. He doesn't want depression for China, and the US wants to help China and not hurt them. Following these comments, major US index futures rebounded by 1% in early Asian hours trading. In the US last week, the US government shutdown dragged into its 10th day on Friday, adding to the bearish sentiment to close out the week. The Dow was down by 1.9% on Friday and settled lower by 2.7% for the trading week. Broad index S&P 500 fell 2.7% on Friday and ended the week down by 2.4%. Tech-heavy Nasdaq Composite, with the most to lose from the damaging trade relations, crashed 3.56% on Friday and closed out the week lower by 2.5%. Nvidia lost about 5%, while AMD dropped almost 8%, with Tesla falling by around 5%. It's not surprising to see that technology stocks were down the most on Friday, as they have significant exposure to China in both manufacturing as well as a large customer base over there. Investors are now looking forward to the US earnings season this week, with reports coming from JP Morgan, Goldman Sachs, and Citigroup, as well as the PPI data and the retail sales data coming in on late Thursday night as well. Back to Singapore, our STI index pulled back from the 4,400 level last week after touching a new all-time high last Tuesday at 4,474 points. We started the week strong, bouncing off previous Friday close at 4,411 points. For the trading week, our benchmark added about 15 points or 0.34% for a second consecutive positive week after previous week's massive 3.4% jump. For the week, Sembcorp Industries led the STI index, gaining 3.1% to $6.41. A media release on 8 October last Wednesday reported that Sembcorp subsidiary would acquire 100% of Renewed Private Limited to acquire 100% ownership of Renewed Sunbright Private Limited for around 246 million Sing dollars. Wilmar International also gained 2.4% for the week and Venture gained 2.3%. At the other end of the STI table, Seatrium led the STI decliners for the week, down 7.3% to $2.28. It announced a notice of termination on Friday for a US $475 million contract for the construction of a wind turbine installation vessel at the US offshore wind farm Empire Wind 1. That is almost 98.9% completed. Seatrium said that it will explore viable solutions, including talks with the end customer, Empire Offshore Wind, which is a joint venture between Equinor and BP, but did not elaborate on the allegations received in the notice of termination. The marine engineering company said that it is evaluating its legal and commercial options, including the possibility of legal proceedings for wrongful termination, but declined to comment on the amount paid out so far on the contract. Citibank analysts noted that the development is likely to have a negative near-term impact on the Seatrium share price, and the emergence of any remedies of damage controls with future disclosure from Seatrium and Equinor would be key to watch out for. So for this week's technical analysis, let's take a look at Seatrium. This morning, Seatrium share price fell by 3.5% after last Friday's 6.5% drop. The termination of the wind turbine installation vessel at US offshore wind farm Empire 1 was a pre-merger deal. It was structured under a 20% down payment and an 80% final payment upon delivery. This will likely have negative implications on Seatrium share price, as Seatrium has realized actual costs for the build, but has only collected 20% of the revenue. Looking at Seatrium chart, we noted that in the first quarter of this year, Seatrium share price jumped to a year-to-date high of $2.60 on the 17th of February. It reached a year-to-date low of $1.62 on the 9th of April due to the US tariff announcement. After that, Seatrium share price consolidated around the $2 level in the second quarter and started to rebound again in the third quarter, reaching a high of $2.46 on the 24th and 28th of July. Last week, Seatrium share price touched a high of $2.50 on Tuesday before the contract termination news was announced, but fell 7.32% for the week after the news broke. Looking at key levels, Seatrium share price has breached both the 50 days moving average and the 100 days moving average and is now holding just above the 200 days moving average in red at $2.18. The 200 days moving average is a long-term support level for Seatrium and should hold for Seatrium share price to consolidate around this level. We also noted in the June and July period, Seatrium share price rebounded off the 200 days moving average around the $2 level and gained about 20% for the month of July. Looking at the indicators, the MACD has turned negative after last Friday's 6.5% drop in share price. Investors will need to look out for subsiding of the negative MACD reading for signs that Seatrium shares are consolidating around the 200 days moving average. On the RSI, now reading at 31, it's just 1 point away from the 30-point oversold level. A drop below the 30-point level indicates that shares are oversold and point towards at least a technical rebound. We observed in the April period when the Seatrium RSI broke below the 30-point mark, and that triggered a big rebound in Seatrium share price. So for investors looking at Seatrium, you may consider the 200 days moving average now at $2.18 as a key support level to accumulate and watch out for consolidation with oversold signal for technical rebounds towards last week's high of $2.50. And these are the updates that we have this week. If you do find this information useful, do remember to like, share, and subscribe to stay updated with the latest market movement. And I'll see you again next week in the next Technical Insight.